Hey everybody, welcome in. It's Sunday. Let's go. Thank you all for coming. We have a very interesting show today. We're going to be talking a lot about, obviously, as always, what you are all thinking in the community. And this is a lot about investing, speculating, borrowing to invest, investing in tokens of other chains, also how to take profits, the importance of layering, and a little bit on options as well, because it's all about how do we make more money fast and how do we manage risk. And so let's just jump in. Great questions. Thank you to everybody as well in Patreon for doing this. Now let's make sure I have everything working. Not my usual spot. Yes. So here we go. Live Q&A. And of course, anything I say here is edutainment. It's not financial advice. You guys know the drill. And all these questions come from Patreon. Thank you so much for keeping me sharp as well. I've been working on this since Friday. But before I jump in, I do want to say something. And I've been talking about kind of pounding the table on Tesla. And we had the most incredible buying opportunity 8-9 months ago. It was mind-blowing. It's when you literally start looking behind the couch, pulling out coins. But I will talk about one thing real quick. And I believe this is truly a watershed moment. And it's regarding, for those of you who hate Elon Musk and Tesla, this will just take a second. But I just want to talk about this for 1 minute. FSD 12, the demo. I did 3 videos in the last week so far on Tesla because it's so important. But remember, this is all about FSD. The version 12 marks a significant turning point in everything that we see in the world. Elon Musk's video was unedited. It showcased FSD capabilities and it highlights remarkable progress. Now, it's not about how it handles speed bumps and turns and roundabouts and stop signs, etc., without any explicit programming. That's the mind-blowing thing. But the use of AI to really train a machine by just feeding it videos to learn. And I'll break it down to 2 simple reasons because I've been thinking a lot about this. And if this stock doesn't pump on Monday, it shows nobody understands anything about Tesla. So the significance of the demo, really, it shows that Tesla's FSD beta is using AI to learn how to drive, okay? They feed it videos. It learns how to drive. It learns new things on its own. There's no heuristics. There's no lines of code. And that is a breakthrough, the biggest breakthrough I've seen in technology of my entire life. This is, as far as I'm concerned, bigger than the internet. It allows Tesla to develop FSD more quickly. It allows Tesla engineers to, not have to manually program every single scenario built into the car, which was also time consuming, very difficult process with edge cases. Now they can just pump videos into a machine and a huge, large data set and make it more robust, to make it safer, etc. So this is the most significant breakthrough I've seen in my lifetime. I'm excited to see what the markets will do. There's no pre-market action right now. But anyway, back to crypto. That's Tesla. I've spoken enough about Tesla this week. So first question is from WHH. We know the stock market is forward-looking. Is the crypto market also forward-looking? And if yes, why are we seeing Bitcoin price at such modest levels when everyone knows the halving is coming soon? We're nearing the next bull cycle run, and the spot ETF is more likely than not. What is going on? Well, this is a great question. First of all, don't know where to stand. First of all, let's talk about, these are just random reasons why I believe the crypto market is not forward-looking. And despite all of the cheerleading by Larry Fink, Bitcoin and crypto is still very immature and very untrusted. There are regulatory concerns. There are ESG concerns. Yeah, I know ESG is what I call BSG. But also the problem is half of YouTube and FinTwit are calling for $9,000 to $11,000 Bitcoin. Retail is selling to whales. Whales are stacking. I proved that as well last week a few ways till Monday, Tuesday, Thursday. But folks still don't understand true scarcity, nor do they understand the impact of the Bitcoin halving. And all of that being said, luckily, we have more time to stack. So the cool thing about all the questions this week is they all dovetail together, which is brilliant. So let's go to the next question, which is kind of everything runs into the next question, so there's no question in isolation. This is from Mopbots, and I see you there in the audience, Mopbots. Coin up. Dry powder is burning a hole in my pocket. Well, lucky you. And Bitcoin is looking like a great time to buy right now, but September is historically a very weak month. Are there indications that this time is different for September, or do we have some shoes to drop yet that will give better sniping opportunities in a week or two, or 3 or 4 or 5? So let's hope you can see me. I'm going to try and get my face in the shot. I wasn't able to do that yesterday. But let's talk about a couple of things. One, JP Morgan did come out and say that downside risk is limited for Bitcoin and crypto, which I thought that was, if you saw my video, I think it was on Friday, I was like smacking myself in the face and said, what? JP Morgan is saying this? It's crazy. But anyway, I do believe there are a couple of potential headwinds out there that we need to be aware of. First of all, Binance is still rattling the market. A lot of concern about that. A lot of concern even about Tether and other related stablecoins. There's concern about FTX dumpage. How much Bitcoin, Ethereum, and other coins will they dump on the market? I'm trying to get an exact handle on that, but I find it very difficult to get reliable data. Nobody is sharing exactly what they have. Also, the Fed craziness. I think there'll be no hike in September, but maybe November. That's going to put a lid on things. Also, stock market crash. I can't tell you the number of open mouths with fire and brimstone, etc., that are out there on YouTube calling for the worst crash in the history of the world. But they've been calling for this for years and years, so I tend to put that to the side. And then you got the Michael Burry stuff, escalation of the war in Ukraine. So there are more potential shoes to drop. Maybe we'll sail through. Maybe this time will be different. Maybe August was weak. Maybe September will be strong. It can happen. But what I'm doing is I am using this opportunity. I still have cash, but I've been buying in. I've been buying Tesla, nibbling on Solana. I've been buying MicroStrategy on dips. So that's been my plan, because even though they may not be perfect bottoms, we are very close to a bottom, I do believe. And even if you look at Bitcoin action today, it's still ping-ponging at that 26,000. Like literally, it's 26K. It will go to 25,990 and then go straight up to 26,050. And today it hit 26,150. It's like a $150 pump. So people got a bit excited about that. But it's just, any dip is bought right now. That's the most important thing to consider. So Mopbots, hope that helps. Now, next question is from Hogbody. I'm selling my house in September, expecting 60 to 80K cash out. I'm building a new home, closing in May 2024. I don't need that dollar to close, but would love the option to take some profits in May. What percentage of cash on hand and into what assets would you consider, assuming early October, say October timeframe for entry, and then exit by May? So, I got some couple of things here. One, time is not on your side. I'm going to give you some rough love here. 6 months is way too short to deploy and hope to get a return. Anything can happen. And if something does happen, like one of the black swans I mentioned for Mopbots before, you could be left high and dry. Okay. So again, I like to place bets over the longer side, like 12 to 18 months. That I find I have much higher probability of winning. And also remember this old investing lesson. Before you invest, you must ensure that you realistically assess your probability of being right and how you will react to the consequences of being wrong. My reason I stress this is because if something bad does happen and it takes more than 6 months to recover, you're going to be out of pocket. You won't be able to build your new home. Therefore, cash, it's too short a window. 6 months is way, 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 way too short to play in the markets, is my advice. Next question is from Afi, sorry. A few years ago, I bought 4 Bitcoin. At the top of the last bull run, I regret I didn't take profit. This bull run, I plan to take profit. Should I sell all but 1 Bitcoin and then DCA later in the bear? Or should I sell all 4 Bitcoin, then buy later to become a whole coiner again? So this is... I like the way you're thinking. So let me kind of break this down, because it's a difficult one to answer. So if your aim is to secure gains while maintaining a foothold in the Bitcoin market, a prudent approach is exactly that. Retain 1 Bitcoin. I always talk about the importance of having 1 whole coin and sell the rest. And by doing so, you'll remain invested in the potential upward movement of Bitcoin while guaranteeing a portion of your profits. Now, during a market downturn, you can then gradually invest in more Bitcoin, leveraging dollar cost averaging your way down. Now, alternatively, if you prioritize caution and wish to distance yourself from the market fluctuations, liquidating all for Bitcoin now and re-entering in the bear market at a later time could be considered a solid path. The problem is, we don't know. This is the problem. Maybe is this time different? Maybe this path mitigates the risk of losses in the event of a bear market. However, it's also possible you could be foregoing potential losses if Bitcoin continues its trajectory upwards. So what we've done is we've built, during the bear, spent a lot of time building things to help us take profits and manage risk and know when to kind of get out. So again, per the previous questions, this is all kind of fitting in here as to how we time things. So I covered this last week actually in the three-step process with layer in, layer out, top and bottom model designed to take profit. When red, get out in certain layers. And in a following on question, I'll talk about the math behind profit taking and how it's literally a no-brainer. So we'll come back to that. Next question will help put that in better in your mind. Now, this is from Captain Teebs, again related to the previous questions. It dovetails into them so beautifully. And it's all about profit taking and, of course, borrowing, etc. So 49 years old, starting late to build a retirement bag, aiming for 2032. So you'll be, ballpark, call it nearly 60. Heavy crypto, 50% Bitcoin, 25% ETH, 15% Sol, and others. Building up a Tesla MicroStrategy bag as well. Purchased all late in 2021. Timing is everything, and your timing was unfortunate, I'm afraid. So again, you can see how all these questions are related. But long-term, very bullish, agonizing over how much profit to take in the bull run. I want to stack Bitcoin, etc. long-term, but I fear that if I don't take a large chunk of profit to reinvest in the bear, I might miss a huge opportunity. And I have no capital gains tax to worry about. What would you do? So again, I love this question. It's, and I'll move this here. See if that is any better. And then I'll know where to stand. Sticking the mic here. So again, it's all about profit taking at the end of the day. But what happens if the demand all of a sudden explodes and we take profits on an asset that goes astronomical? I'll give you a case in point. It was Tesla. My average cost base is about $17.50. If I had taken profits when I went to say $100, I would have missed out on another 3x. So there are certain assets you always want to kind of keep as well. Now, related to that question, there's another question, and I'm going to go to this, and I'm going to go to profit taking answer specifically. This is from Tyler A, and again, it dovetails into Mr. Teebs. I have savings I don't touch and not too much cash on hand. If I wanted to buy some Bitcoin with a Heloc, which is a home equity line of credit where you borrow against your home for $100,000, would that be dumb? I will have to pay interest, but I can pay it off in a reasonable amount of time, and the gains would far outweigh the interest paid. Looking to make some life-changing gains through this bull run. So Tyler A, the number one rule, I've always said it here, never borrow to speculate. So I hope that's clear, first of all. And it goes back to the previous question regarding time. The more time you have, the better. So this is the whole Bitcoin Gambit I'm going to walk you all through as well. I always say there's a 1% chance that things could go to hell, could go to zero. But as long as you have time on your side, the 99% chance will do extremely well. Now, fiat will debase at an accelerated pace. Deficits are exploding. There'll be more money printing. It's going to get real crazy. It's actually happening way faster than I expected. I did expect it, but now it's even worse, especially this year. Now, the amount you borrow now is higher than the value you'll have to repay, as long as the interest rate is not too extortionate. I talk about the 3% days where you could borrow, millions of dollars at under 3% interest only. It was insane. That was only a couple of years ago. But just for everybody here, and if you are borrowing to speculate, make sure you have enough runway to get through at least the next 5 to 6 years. Do not borrow anything with a 6 months time frame. It's way, way too short. And the other investing rule today, going through a lot of investing rules, The Bitcoin arithmetic is on your side. Buy not on optimism, but on arithmetic or math or whatever you want to call it. And therefore, we know it's going to go up. Even if nothing happens with demand, Bitcoin is going to go up because fiat's going to go down. So again, if you, not saying you should, but if anybody out there is borrowing to speculate, all right, you've got to be extra aggressive with profit taking. We know after the halving, the price will go up. So again, like we shared before last week, when red, get out. But identify those layers. And I want to talk a bit about profit taking layers. So the very simple example for you all. And you can create your own spreadsheet, your own cost basis, whatever you want to do. But here is a simple example. Now, it's a simple table. So the top, you're going to sell in 3 layers. I like to sell in 3 to 5 layers, by the way. And I like to sell different types of chunks depending on the asset, whether it's an even 20% of existing holdings or 20% of the actual bag value at the time. It depends on the asset. Now, the model below is you buy. So imagine you buy Bitcoin, your average cost is 20,000, and you want to sell at 100,000 because you think it's going to go to 100,000. If you do that, you make 80,000 profit, which sounds ridiculous. I know for people who have been in the markets for a long time and they hear these types of numbers, they say, how is that even possible? But many people expect it. So a lot of people are calling for $147,000. I covered $150,000, $180,000, $240,000, $220,000. All these crazy numbers. I think we need to be extremely conservative and be prepared to take profit at much lower levels. So let's go to the first option here. Now, I put in 3 sell layers. So 25% of your bag at $50,000. 50% at $75,000, and then 25% at $100,000. So the reason for these layers is, first of all, you could actually gear your 25% first layer to cover your loan back. So if Bitcoin goes from, say, 20K to 50K, sell enough to repay the loan as quickly as possible. Take your money off the table and play with the table's money. For those of you who watch me in Patreon, you know exactly how I do that, and you can take much more risk when you're not playing with your own money. So that's the first thing. So you pull out 12,500. Second layer, you sell half, 50%. The layer price is 75,000, and you take 37,500 off the table. The third layer, you sell the last 25%. You take 25,000 off the table, and you pull out 75 grand. Now, the difference, of course, between what you pull out versus what you originally invested versus what you would get if you waited for Bitcoin to hit that 100,000 is the danger. So last time, like literally, my target to get rid of everything was 89,000. We went to 69. So I was off by 20K and I didn't layer out. That was the mistake. I will not make that mistake again. I don't make mistakes twice. And that's why we built the layer out model. This is the math behind that, to make sure we know. And I know the maxi is like, well, you never sell Bitcoin. It's like, we'll see. But again, remember, like I did mention before, we don't know if Bitcoin's just going to go straight up forever. That's also possible. So you always need to be in the market some way. Or what I like to do is hold your position, keep the long-term capital gains, and hedge it. So if it does tank, you're protected to the downside. So that is key. But remember, if anybody is ever borrowing to speculate or using money in a very speculative manner, be careful. Speculation is not investing, and I'll talk about that in a minute too as well. And if you do have to do this for whatever reason, make sure you pay back the loan as quickly as possible. All right, next question is from Saddle Monkey. I've heard you say many times, don't play with options unless you know what you're doing. I want to learn what to do. Can you please suggest some reading material or other media to get us started on learning options to chase more alpha? Well, first of all, I wouldn't be where I am if it wasn't for options, but I actually grew up in the space. So my background is kind of options and risk management and education. Everything else is towards that. So I've been deep in it for 33 years. So it's very, very important as well when you think, if you are trading options, you're typically trading against people who really know what they're doing. And there's a lot of people on kind of YouTube and Twitter who pretend they know what they're doing, but really they don't. So don't be enamored by them. But always imagine you have a pro on the other side of the trade, and you've got to be better and smarter and better equipped with tools and models and a process to beat them. All right. You're not dealing with some guy on Twitter or on YouTube or whatever else. You're dealing against pros moving large amounts of money. So if they're selling something and you're buying it, ask yourself why they're selling it. If you are selling something and they are buying it, ask why they are buying it. Very, very important. So everything you need to learn is in, we have an options trading playlist. We'll add it up here after the video. But literally it breaks down everything, covered calls, different strategies, some of the preferred strategies that I use, tons and tons of videos. Literally, it'll take you a while to get through all of those, but everything you need to know is in there. Also, we have exclusive Patreon videos in Patreon that break down a lot of the trades, especially like the trades over the last 10 months have been completely bonkers. I made an entire video about that as well, and you'll see how things are done. And then probably most importantly is the community. We have options channels in Discourse and Discord, extremely active, extremely sophisticated players, and we share ideas and strategies and methodologies as to how this is all done. And tons and tons of people are extremely active in there, sharing their trades and ideas. So between these three sources, you have everything you need to know. You don't need to read a book, but I do have book options too. If you go to Discord and search, you'll see them too as well. So that's kind of what I would recommend, and that's all you need to know. Next question. Let me see. Another options question from Philippe P. I'm enjoying the IA suite. Could you cover in one of those Patreon briefs something more on options for the mathematically minded? Those who dig first and second order derivatives. I mean, how you use delta, gamma, theta, and IV in your choices. So let's walk through these. They sound, when people talk, say, oh, they're talking Greeks, the brain turns off. But they're not complicated. And when people hear second derivatives, the brain just goes to sleep, dies. It's not hard, it's not tricky. So I'm going to explain all four in real simple terms and kind of how I like to use them and which ones are my favorite to focus on. So first of all, delta, let's say the delta of a call option is 0.6. I did cover this last week, and I like 0.7 and above. And this means if it is 0.6, that means for every dollar increase in the stock price, the option price will increase by 60 cents. And if the stock price increases, say it starts at $100, it goes to 101, the option price should increase by 60 cents multiplied by 1, which is equal to 60 cents. Super simple example. And that is all you need to know. That is delta. Now let's switch gears and talk about gamma for a second. Again, suppose the gamma of the call option is 0.08. This means that the delta, this is the second derivative, of the option will change by 0.08 for every dollar change in the stock price. So if the stock price is 100, if the stock price increases by $1 to 101, the delta of the option will become 0.6 plus 0.08 is equal to 0.68. Now, theta, I like to sell theta, okay? Theta, think of it as time, T for time. Imagine if the theta of a call option is minus 0.03. This indicates that the option's value will decrease by 3 cents a day due to time decay. That's it. What I love to do is sell time, and a lot of people love to buy short-term options. They are deathly unless you really know what you're doing and you get very lucky. If no other factors change, the options value would decrease by 3 cents times 30 equals 90 cents over the next 30 days. And I like theta. I sell it all the time. Now, final one is implied volatility. Suppose the current IV for the option is 25%. A higher implied volatility suggests a greater than expected price volatility. If the IV were to increase to 30%, all else being equal, options price would increase due to heightened perceived risk. And if it decreases, same thing. So basically, when you look at a chart and you see a huge spike out of nowhere, it means the volatility is going through the roof. That means the options pricing will go through the roof. That's when you sell. It's that simple. I call it stealing candy from a baby, although I'd never do that. It's just an old expression. And that's it. The four Greeks explained in super simple terms. don't be paralyzed by it, and just focus delta and theta and volatility. They're the three that really matter. The rest doesn't matter. Next, from Mr. Balzac. I hope I'm saying that right, and I hope I'm not being trolled. Should we be trading in our native fiat currency, for me being Australian, that is AUD, or should we work in USD as we don't have all the pairs to choose from for other altcoins? I'm currently working in USD for ease of price alerts with buys, sells, and I convert to USDT and use on DEXs. So this is a great question, and it's super interesting for me as well, because we have a huge amount of members from Australia, and they will love this too. So let's talk about, when you think about pairs, the things you need to keep in mind as well. And this is comparing US dollar pairs to AUD pairs. So first of all, you got to look at trading pair availability. Not all desired pairs will be in your native fiat, but trading in USD will offer much more exposure to different pairs with different altcoins, etc. Also, there can be native currency volatility. Volatile native currency increases trade risk. For example, currency devaluation against the US dollar might lead to losses. Then trading goals. Long-term investors might tolerate native currency volatility, while short-term traders may prefer a stable currency. Then your personal choice. For example, if you're trading in native fiat or USD, it depends on your circumstances and if you need to cash out, what you need to go back to, etc. And also, staying within USD, I like what you're doing with price alerts and being comfortable with its volatility. There's no need to change. But the most important consideration as well is if you're swapping between currencies, think about currency conversion fees, market liquidity, and your own risk tolerance when it comes to deciding as well. So let's look at where we are with the dollar versus the Australian dollar. As usual, here's a pair chart that tells you exactly what's going on. So this is the USD AUD chart, and you can see we are down about 70% over the last 12 years. That means the Australian dollar has weakened against the US dollar. And you got certain countries in the world that do very well when commodities are exploding, like Canada and Australia. But the decline in commodity prices, which are a major export earner for Australia, has dinged the currency. Also, the rise in interest rates in the US has made the US dollar more attractive to investors. And there's also a widening current account deficit in Australia, which reflects the country's imports exceeding its exports. And of course, as I always say as well, fiats fail into the strongest fiat first. So although it looks like from this chart, wow, the US dollar is amazing. No, it's also bad, but one is worse than the other. So from that perspective, if I was in your shoes, keep an eye on the commodity markets. If, for example, the big Australian commodities start exploding in value, that will strengthen the Australian dollar. And you want to be more in the dollar. But if things remain weak on the commodity side, stay in US dollars. Hope that helps. Next question is from Timothy O. I'm invested in the Cardano ecosystem, and several projects caught my interest that I would love your insights on. The projects are Meld and WMT. Sounds like Walmart, but it means World Mobile Token. The second one seems like it would be right up your alley from a social contribution standpoint. Ooh, well, not really, because if you follow social sentiment, you will get toasted, okay? So you need to be ahead of the game always. If you are following a social trend, you're already too late, okay? That's my alley. So let's talk about a couple of things. Transparency for these tokens is really bad, okay? So let's dig into what I typically look for. And I know everybody's making YouTube videos about Meld. It's really popular, and people are making videos about WMT and maybe pumping it or whatever else. But let's look at what I look at. And this is one of the reasons why I'm very unpopular out there, because again, we'll talk more about why, but Meld Red Flags. Self-reported circulating supply. It's self-reported. There's nobody checking the actual supply, all right? So this is a major red flag. Do not touch anything with any type of self-reporting. That is scary out of the gate. Also some public stuff as well. I did a very brief search on Meld, but this is from GGT Crypto. Cardano problem is not the primary thing, but Meld has tackled regulatory issues. But I'm more concerned about things like tokenomics. I don't care what people really say in the public comments. But Meld Red Flags, if you look at the tokenomics, I know out of the gate, they are not good. This is a whole bunch of people with a huge percentage of the tokens want to use you as exit liquidity. So I know there's a big vision of it being the new global crypto bank or whatever, but again, the way it's structured out of the gate is not favorable for investors. Now, switching gears to World Mobile Token, red flags. Well, first of all, let's go to our crypto compendium. Check out the score. So you can see here, the crypto compendium score is 2.5. I need at least a score of 6.5 to even consider investing. This is at the bottom of the toilet, everybody. If you look at the crypto compendium, median score for this category is 4.78, and the composite score, global median, is 4.005. So World Mobile Token has terrible inflation score, terrible insider distribution. I think they have 85%. Well, concentration 90%, centralization 100%. This is just not what you want. And just a visual of where it kind of stands up, World Mobile Token, it's worse than Sweatcoin, it's worse than Apecoin, it's worse than XRP, etc. It's just a complete money grab. Yeah, I wouldn't touch it. But there's more. I want to share more just to reiterate why I am unpopular, but also because I do believe 98% of crypto is a money grab or a scam, or they're not going to make it, or there'll be no volume, there'll be no liquidity, there'll be no adoption. There's 1,000 different reasons why these things will not work, okay? And this is a cool little article here. Thank you to Sanjay for sharing with me from Bitcoin News. Just in, a report shows that 91% of altcoins from 2014 are now dead. So they all died, all right? I say 98% are scams. This study shows that 91% are dead. And I guarantee you there's another 7% of those that are dying. Some tokens just take a long time to die. So go into the markets with the approach of, okay, I believe 2% of tokens will make it. Convince me otherwise that this token is in the top 2%. That's why we built the SCP profiler, the compendium, and that's why these things can identify garbage from 100 miles away out of the gate every time. Now, a couple of other things I want to hammer home on. This is so important. My job is to make sure you don't get or become exit liquidity or get scammed out of your money. So this is a great quote from Peter Drucker. I loved his stuff in the past. It was in the 80s when I started reading about this guy. I call it no data, no measurement. If you can't measure it, you can't manage it. For me, this is applicable to investing. In order to invest or manage investments or to choose investments, you need to be able to measure their performance. This means tracking their returns, tracking their risks, tracking their leadership teams, tracking other metrics, tracking how they compete and how they're structured with other competing tokens. That's it. That's why we measure everything, okay? And successful investors, by the way, this is supposed to be the third or fourth little lesson today. Successful investing professionals are disciplined and consistent, and they think a great deal about what they do and how they do it. They measure everything, and they use tons and tons of research and data to think about what will win and how much it'll win by and who it's competing against and what are the other threats, etc. So that is kind of my take on Meld and WMT. Way too risky. So this is another one from user 5. I'm still bullish on AKT despite buying at the top. I held with conviction and DCAed to the bottom. What are your thoughts on how it compares to other cloud computing GPUs and other AI focused projects? Well, we have a tool for that. Mentioned it before. So this is the compendium score for Akash, which is AKT, and its peer group. And you can see it is the second worst of all of the peer group there in this respect. It's not good, it's not catastrophic, but there's a couple of things that from a very quick, it wasn't by no means a deep dive, just Googling it, reading about it for half an hour. First of all, there's a lot of stuff I read about the CEO boasting about being blocked by render, The CEO provides negative feedback on competitors, displaying immaturity. The compendium says very unfavorable tokenomics. It's also not listed in any major exchanges like Binance, and Binance lists everything. Whales own 91%. It's very centralized. Again, also, I like to show a chart, but the chart is so new that you can't really make any decisions from it. So, I always say this faster horses. This is definitely not a faster horse. And going back to this, we can show, how tokens perform and the correlation between compendium scores. Good scores perform well on average, far better than bad scores. It's that simple. Next question from Early Birdie. And I don't like talking about this stuff, but I'll make it very brief. And our job is to answer the questions. So how would you see the market react if we hit another worldwide pandemic wave as bad as the last one or even worse? And what economic fundamentals is important taking notice that are different or same compared to the beginning of 2020? So my thoughts real simple, and I hope this doesn't offend anybody, but I do believe the world is better prepared. The world expects it, so you can't be surprised by what you expect. It's a good thing. And the world is tuned into market dips like the last time. People bought the dip. It was the biggest V-shaped recovery I've seen in my entire life. And it's kind of like a boy who cried wolf. I believe humans are smarter and know more, and they're less trusting of people that tell them what to do. So when it comes to what would happen as well afterwards, would there be crazy money printing, etc.? I don't think so. I don't think they can afford that. But then again, they're still printing money and things are in terrible shape out there. So we'll see. But there's always an opportunity as well if we do get such a catastrophe. We'll know about it hopefully first. And it's very clear from the media as well that they're trying to rattle people at this stage. So with that, time for a more fun story. And we'll get to a couple of questions from the audience. This week we donated to White Whiskers. It's a senior dog sanctuary in New York to help support their mission of ensuring well-being of senior dogs by providing a caring and compassionate option to live out their years. And a big thank you to our Patreon member, Marcus, who tipped us off to this really cool organization. I'm one of those old dogs too, so don't forget as well, if you want to amplify your intelligence, this is the channel to do it. So let's jump to some of your questions, and thank you all for being here. Let me see. One Bridem. I need to blow this up a little bit. I am running from a little laptop, so make sure I can read these things correctly. One Bridem. I'll be able to build my Bitcoin and Sol bag towards the end of the year. What do you expect pricing to be towards the end of the year? It's hard to say. What do we have? 4 months, 16 weeks. It's really hard to predict price action in a very short window of time like that. But I do expect Bitcoin should be around 30K. Solana could be somewhere between 20 and 24, 25. Maybe if something happens with more adoption, more partnerships, maybe if they come out of beta, maybe if they launch Firedancer, that would be a game changer. If they do more DPIN stuff, that would also be red hot. So it could go real high. But right now we face the FTX fear of how much they're going to sell. Of course, Bitcoin, Ethereum, they have a whole bunch of Serum and some other tokens too, but I'm trying to get a handle on exactly what they have. But it's hard to say. My target though for April is 40 to 42K for Bitcoin. I think there's a very good chance we could get there as well. Again, barring any black swans or shoes dropping as well. Let me see. Guns and JR in Switzerland. SmartDex, can you give us your thoughts? I have never heard of SmartDex, I'm afraid. And I have analyzed all of the dexes. It's a very, very small DeFi platform. I'll have a look and see if anything comes up, but yep, never heard of it, I'm afraid. Let me see what they got as pairs. It looks like just a smart exchange. Wow, they got a lot of looks like a lot of ERC stuff. That doesn't satisfy my needs. So it looks like all gaming tokens. Yeah, not something that I would play with, but I'll have a look and see if there's anything there. But there's just so many dexes right now, and I want a dex that handles all tokens, not just ERC stuff. Next question is from Stephen Weston. Are you still bullish on Solana? Yes, I am. It still comes out on top on everything that I've done. But the problem is we have this weird situation now, Stephen, is there's so much competition for, users, layer ones, layer twos. There's just so many of them right now. It's insane. And that's really detracting. One of the reasons why I think kind of Bitcoin maxis hate altcoins is because they're taking liquidity out of the market, but also all of the layer ones and layer twos are taking liquidity out of money that would otherwise go to Solana. So there's just a lot of attention. But what I can tell you is when you look at data, Solana is the highest grade investment so far this year on a proportional basis from institutions, bar none. Institutions are seeing the power of DePIN. They're seeing the adoption. They're seeing the crazy value of it. And if there is an L1 to challenge Ethereum, that's it. And that was always the thesis. And so far, they're way further ahead than I would have ever imagined as well. So I'm still bullish on Sol. It's still my third biggest crypto position. KN successfully sold my first covered call. Thank you for the life-changing content. Well done, KN. Very proud of you. That's awesome. And again, take it small, paper trade a lot, manage your risk carefully, and we'll see. Viciously, I've been using MicroStrategy ArbCloud with great success. I want to add in some 6 to 8 week option calls to mimic the trend flips. Could you elaborate on what you would do in this case? Well, what I would do, let me see. Option calls. So again, going back to what we discussed, 6 to 8 weeks, it's very difficult to determine what MicroStrategy will do or Bitcoin will do. And MicroStrategy has an added level of calculus complication right now because they were diluting their stock. They sold up to $750 million worth of stock to buy Bitcoin. We don't know where that is. I have a funny feeling it's close to being over. It results in about 13% dilution from my calculations. We'll see. But basically, MicroStrategy looks like it's bottomed now at around that 330 level. And it can go very fast upwards. We saw it go from 350 to 475 in a couple of weeks. If people get excited by Bitcoin again and don't have access to pure Bitcoin, they will go the proxy route, which means a lot of money will go into the miners and MicroStrategy. So I think from that perspective, it's good. But to say what's going to happen over the next 6 to 8 weeks, very difficult. And also because MicroStrategy has been flat, we don't have high options prices. So they're cheaper to buy, but they're not good to sell. So I'm not sure in your question where we are, but basically if things are down low and they're at a bottom, I like to sell puts, but I also like to sell puts after a spike down. You get more premium. And if we're at a bottom, and if Bitcoin's at a bottom, which I believe it possibly is, it could be good buying a call as you ride up. So it's tough to say though with the next 6 to 8 weeks. So 6 weeks takes us to kind of end of September, early October, which is normally pretty bad. So from that perspective, be careful out there. And thank you as well for your super sticker, AC1, Great Escape, Signal 103, Adam Q, Glenn Johnson, Pancake Panda, and Sir Winston. And DCAed tomorrow is on Ivan's channel. And back to Stephen Weston. Of course, I'm still bullish on Solana. The value of what it offers and what it has is far bigger than anybody else. But next time some big news comes, I will definitely cover it as we go forward. So with that, everybody, thank you so much. Have a great weekend, and I'll see you all tomorrow. Bye.